Good evening and welcome to today's video. Now before we dwell into today's video, I would like to remind you to subscribe to the channel and also like the video once it ends. Now today I'll be covering the Nifty and Bank Nifty indexes again. This is the last time I covered the Nifty and Bank Nifty indexes when the Nifty was trading at 20,260 rupees. Now since then the index has fallen, and in that video I had given some key reasons why I expect the index to fall. First was that it reached my quant resistance levels. Number two was that on the chart we could see that the volume breakdown had started going significantly bearish, which was another indication that things were going bad. The next reason I had given was that the banking sector data, basically mainly the PSU banking index data, if we looked at it only from a data perspective and not from a chart perspective, it had gone bearish, and that was suggesting that a down move was coming. Also, I had highlighted that Reliance's failure to participate was one of the biggest signals that there was an issue, and Reliance has started showing that it's also, from not participating and being in a box range, it was going into a full-on bearish mode. So these are the main reasons I had believed that we will have a fall, and that did take place, as within 6 trading sessions we have managed to come from 2260 to 19550, which is a sizable fall for the Nifty index and the Bank Nifty too. Now I believe right now the indexes have reached a crucial point, and today's low will determine whether we have roughly formed a bottom and will trade in a box range, or whether we'll have an upswing back up. So to highlight that in a more better way, I'll cover which is the resistance level and the support level in each of the indexes, which will determine whether it's a simple box range or it's an upswing or a downswing. I'll only look at the Nifty and Bank Nifty, as these are the indexes which control the market. Yes, there might be many expiries now due to basically the government bringing in every other index to trade, but those are not significant still, as the cream of the money still lies with these two. Now when we look at the Nifty index, how I've highlighted it is basically used the top of today's candle is a simple resistance, and the bottom of today's candle is the simple support. Now if the basically Nifty index is to break the top of today's candle, then the real test for it will come at basically 19,840. That's the quant resistance level. If we manage to reclaim 19,840 on a daily chart or on a 3-hour chart with a bullish close, then that will be signs that yes, we are going to go back to basically to the higher resistance levels, which will be a positive for the bulls. However, if we get rejection around 19,840 in the longer time frame charts, then we are going to be coming back down towards the simple support. On the downside, if we are to break the low of today, then the real test for the index is at 19,420. Because if the index breaks 19,420 at any point, then the floodgates are going to open for it, and we're going to go in for another sizable fall. So basically the levels which I am looking at is 19,840 and 19,420. These two zones is what is going to decide how we trade in the coming weeks to come, as basically any movement within this is just going to be basically forming a different box ranges across the point. But these two are what is really important to watch out. I'm not highlighting resistance levels, targets above that and below that. It would be unfair to the clients to do so. Now when we come to the Bank Nifty index, now the Bank Nifty index I've done the same. We have seen very good rejection from the bottom in the Bank Nifty index. So Bank Nifty index, I've given two quant supports rather than one. This is as if the Bank Nifty were to break the low of today, which is 44,135, then the support zone which will hold meaning for it is 43,400 to 43,650. 43,400 is ironically also a simple basically candle support. If you look at it in the past, is it's quant support matching a single candle support, so that means it's a very strong support level to watch. This is if you break the low of today. However, if you break the high of today, the Bank Nifty, whether people like it or not, will test 45,280. High likelihood it does that. I know the 50-day moving average is in between, but I don't think that will count that much, as if you break the high of today, it will want to test 45,820 in the coming sessions. So, but the real test of it is going to be obviously at 45,280, as it has to break that for any significant up move to come in the coming weeks. And on the downside, it has to break 43,400 to 43,650 for any downside. So today's candle is going to be a huge deciding factor for how the indexes perform in the coming sessions. Now, on overall, basically, the indexes are at a standstill, and tomorrow I think it will be a very good day for day traders, owing to how today we had a rejection. So we can end up having a very volatile day tomorrow with both sides or good swing. So it's one I think day traders should keenly watch. Now, how I'll be tracking whether we're going to go to test 45,280 or 43,650, or it's going to be a failed breakout from the simple resistance, is simply using the volume builder and the trend catcher. If you want to get access to those indicators, then you can contact me directly and I will give you access to them on a yearly basis. So thank you for watching, and if you liked the video, then do hit the like button and also subscribe to the channel. Thank you.